Hi, my name is Vicky. I'm one of the partners at Fund NV2, along with Jeff and Kristen. My background is I've been working in tech for quite a while. I was a founder about 10 years ago. I founded a company that was sold or acquired by a bank. Since then, I've been working early stage as a founder or helping other founders. So a lot of what I bring to the table is evaluating companies from the perspective of an operator and understanding what it takes to really scale a company.
Hi, I'm Kristen. I'm a partner at Fund NV. I was born and raised in Las Vegas. Went to college at UNLV where I graduated with a computer science degree, and have been in tech for over a decade. I've been a part of three early stage startups as a tech leader, all had exits, and one late stage startup as a director. So I've grown to love building companies from scratch in the early stage. And now I am excited to be able to invest in early stage companies within the state of Nevada to help build the ecosystem and help other founders as they start on their journey.
Hi, my name is Jeff Sailing. I am one of the three partners at Fund NV with Vicky and Kristen. My journey started on the founder side in Silicon Valley. Was part of either the founder or part of the founding team of three companies that ultimately IPO'd. So all enterprise software companies. Part of another company where we were sold at and then started Startup NV in 2017 to help the ecosystem in Nevada. And while that was great, we found that there wasn't a lot of capital to invest in companies in Nevada. So started Fund NV, the first fund, and a couple of other venture funds in the state, and have been on the investor side ever since then. And we've made investments in 21 companies, since 2021 when the venture capital part of our journey started, and are super excited not only about our second fund, Fund NV2, but generally about the startup ecosystem in Nevada and throughout the western part of the US outside of Silicon Valley. Startup NV and Fund NV are related because Fund NV grew out of Startup NV. All of the companies that come through the Startup NV process, whether they're earlier companies seeking incubation or later companies that are seeking funding from Fund NV, ultimately get help from the Startup NV organization. And because the community knows that that's how they apply for funding, we end up seeing about 1,000 applications every year through the Startup NV pitch process, and another 1,500 or so applications, total of about 2,500 applications a year for companies looking for funding via Startup NV or coming directly through Fund NV. So Startup NV is really the engine that's creating the demand that Fund NV looks at when we're considering which companies to invest in. The reason this relationship between Fund NV and Startup NV is good for our limited partners, our investors, is because Fund NV invests about 4, 5, 6 times a year in the companies that come through our pipeline. And if you do the quick math on that, that means that we're looking at about 500 companies for every company that we select to invest in. Now, clearly, it's better to have more choice when you're investing. We're very careful about the companies and the founders that we choose to invest, but having a wider range of choice is good. So that relationship really drives the options for Fund NV and therefore for the investors in Fund NV. The quality of the companies that come through Startup NV has really improved. Now, we started Startup NV back in 2017, and the ecosystem in the area, both in Las Vegas and Reno, which is primarily where our Fund NV investment companies are based, boy, it's gotten so much better since then. Maybe you can blame that on the fact that Startup NV is doing a great job in educating founders and having them focus on ideas that are scalable. Maybe you could blame it on the fact that lots of people are moving into Reno and Vegas from other areas that are a bit more mature. Either way, the quality is getting better and better almost quarter by quarter. It's amazing. And we believe that this will continue both through the efforts of the Startup NV ecosystem and training the founders and those sorts of things, as well as our universities getting better, as well as all the new people coming into the ecosystem as they leave other parts of the country.
When you're thinking about early stage investing, either in a company or a fund, what are you looking for, right? So if you're someone who's going to invest in a fund, an early stage fund like us, you're trying to find the best fund. And when it comes to a really good fund, it really boils down to two things: maximizing deal flow, so having the most options possible, and choosing well. And in Nevada, especially at the early stage, I think no one has better deal flow than our fund. And we've been really good at choosing.
To Vicky's point, since 2021, we've invested in 21 companies in our ecosystem, about $9 million. That $9 million, as of the date of this recording in August of 2024, is worth a little over $25 million, which, if you compare that to many of the other funds that are out there, particularly the early stage funds, it's a really good track record.
Part of the success of this track record is the investment criteria that Fund Envy has on selecting potential portfolio companies. And so there's a few things that we look for. First and foremost is founder market fit. We're looking for founders who just have the right attitude. Maybe they have a little additional domain knowledge in the vertical that they are focusing, and they also have the right attitude. They have to have the right gumption. A startup is kind of difficult. You have a decade-long path that you're going on, and you have to have the tenacity to see it through. So founder market fit is a big thing. Second, we're looking for early revenue companies. You can't just come up with an idea and look for investment. Like that's not good. You need to have built your initial product and have a little bit of early traction, proving out product market fit. We're looking between 5 and 15,000 in monthly revenue. That kind of de-risks the investment for our fund because we see that early traction, that early product market fit where people are actually purchasing your product. We are also looking for the right market. You need to be able to scale this company. We're looking for 40 to 50x returns on our investment. So if you want to scale to 2 to 3x, that's great for you, but not so great for the fund. So Fund Envy, we have a fortnightly pitch day where two companies pitch to the partners here, and we evaluate the company, their business model. We ask the founders questions, and we decide if they're worthwhile investing in. And so once we have done diligence, agreed on terms and valuation for the company, we go ahead and make the investment.
To Kristen's point, when we get excited about a company, when we see them pitch, oftentimes we'll invite them in to talk to us, ask them a bunch more questions beyond the pitch. Then we dig into the due diligence process, both in terms of the market size and the valuation on the investment, making sure it's an investable company and an investable idea and founder. And once we get through all of that, we make a deal. We sign the documents. Then we have an arrangement with the state of Nevada, which is pretty cool. The state of Nevada, through a nonprofit called NBBGEI, matches our investments dollar for dollar. So if we invest $100,000, the state joins us in investing an additional $100,000 in the company. Oftentimes, we will lead an investment with $100,000. We'll put out a deal memo to our syndicate and say, hey, we're investing. Do you guys want to join us? And more times than not, we'll raise an additional $100,000, $150,000, $200,000 in addition to the $100,000 the fund invests. The great news is that when that investment is matched, the whole thing is matched. So even though we're starting with a $100,000 offer and investment, those investments are often closer to $500,000 or maybe even a little more by the time our syndicate joins us and then all of that investment is matched by the state.
Yeah, and I've spoken to a number of founders who have been through this program and gotten the match. And it's really a game changer because you can go through Startup NV, go through the accelerator, get your funds matched, get $100,000 from Fund NV, and you're 80% of your way of raising your pre-seed round, which is huge. And that was kind of something that was not thinkable 5-10 years ago as a startup in Nevada, you would have to go to the Valley, you would have to, travel with your roadshow to fill up your pre-seed round. Now, majority of it is filled up through investors located here in Nevada, which is great.
So Fund NV is looking for companies that are generally capital efficient. So that leads us to avoid companies that aren't. So examples of some of these are a new medicine in the pharmaceutical industry. It takes tens, hundreds of millions of dollars to bring something like that to market. So things that are really capital intensive, we tend to stay away from. We also don't particularly consider ourselves experts in consumer packaged goods. So it doesn't mean we will never invest in one, but we tend to shy away from investments like that. Crypto investments, we don't feel we have expertise for those. And anything generally that's requires much more capital than what a pre-seed investment could sustain over time.
We also don't invest in startups that are only in concept stage. You have to have taken the step to build a product. Even if it's beta, even if it's an MVP, you have to prove that your idea can stand, it can exist, and has that early traction. This is important in de-risking at the pre-seed stage. Because going from concept to actual product, that's a big step. And we want founders who have completed that hurdle already.
I think another big one for us is we're looking for companies and founders who are able to take their idea and make it really big. I think we mentioned it earlier. We're targeting 40 to 50x returns, or the company that's able to do that, because we want to make it worthwhile for the investors in our fund. So, again, if you're a company that's looking to build and get 2-3x return, that's great. There's other funding opportunities. But for our investors, we're looking for the opportunity for a company to really scale. And part of that is early momentum and hopefully taking that for many more years to come.
And bringing that back to the investors, it just makes the investments that we make higher returners for the folks who invest in Fund NV. Who can actually invest, and why should you invest in these early stage startups? Well, first big reason is historically, since the 70s, these early stage startup investments have done the best of any type of investment that you can do. Now they're risky, so you don't want to push all your chips in on these early stage investments, but partitioning, 5-10% of your net worth into this kind of an investment is, in my opinion, is generally a good place to start. Now, in order to make these investments, if you have to be something called an accredited investor, which is an SEC regulation, which means you have to make more than $200,000 a year, have more than $1 million of net worth outside of your principal residence. Now in Nevada, we've done a really cool thing. We've created a thing within our state called the Nevada Certified Investor, which means that if you make more than $100,000 a year as an individual, $150,000 as a couple, you can invest in these private companies through Fund NV because we're only investing in Nevada companies. So we're obeying all the state laws with regard to these types of investments. So if you're thinking about trying to make a better return on the investing that you do, sure, you're going to put some money into the public stock markets. Maybe you're going to buy some bonds. You're probably going to have a little bit of real estate. But putting some money to work in these early stage investments, I think you'll find that you'll make a good return if you have a good choice of investments and if you pick them wisely. We think we do, and we hope you'll join us in our fund and watch us as we do our work and make some good money while doing some real good in the community by encouraging our local startups.
One interesting question we often get is, can anybody invest in startups? And unfortunately, the answer has historically been no. Right? In the past, it's been limited to accredited investors, oftentimes people who are worth more than $1 million or earn more than $200,000 or $300,000 a year, which is pretty limiting. I think some people would call this like the rich getting richer, but luckily for our fund, there's a new law now called Nevada Certified Investors. So for Nevadans, if you're a Nevada resident, you can now also invest in startups if you earn more than 100K. And that gives you an opportunity to now invest through us and invest in Nevada-based companies.
One thing that I find that's really awesome about investing in early stage startups is you get to be on the ground level of building something new, something that could be game changing, something that, could go out and millions of people could use and it'll positively impact their lives. Being an early stage investors, you're the first one that sees these companies and you believe with the founders of what the future can be. And also with Fund NV, these are Nevada-based companies as well, which you can take pride in your community and help your friends, your neighbors, your community succeed as well. And I think that's pretty cool.
So we often also get asked who or what type of person is the right profile to invest. For us, we think about it a few ways. One, if you're a Nevadan or a Nevada resident, you can be a Nevada accredited investor. So if you earn more than 100K or 150K with your spouse, you can invest. If you're not a Nevada resident, then you'll need to be an accredited investor. So likely that means you earn more than 200,000 a year or 300,000 of your spouse. There's other factors that you can meet as well. You're also someone who's probably invested before, probably not in early stage startup companies, but in public stocks or mutual funds, ETFs, bonds. And in this case, you're interested in starting to angel invest, the opportunity to invest in your company, to invest in companies and founders at the earliest stage. And you're probably someone who has the ability to invest at least $10,000 to get started and be able to invest in a variety of early stage Nevada-based companies.
Picking up on Vicky's point around who are the investors and what does this mean? It is a risky investment class. It has performed better than all other investment classes, but it really comes down to spreading your risk and picking the right companies. There's something at play called, you'll hear about it, called the power law, which says that about 1 or 2 in every 20 or 30 companies are really going to be the ones in your portfolio that make your entire portfolio return, that 3, 5, or even 10x in total, which is one of the reasons why we aim for 50x per company, knowing that as good as we are at picking and as good as we are as due diligence and as good as the founders are, life happens and they all don't work out. So you need to be thinking about investing in a portfolio of companies. Now, at Fund NV, we make that easy because we're going to invest in at least 20 companies in this fund. And so if you invest in the fund, you're getting that diversification and you're getting to put the power law to work. If you're going to do it on your own as an individual angel investor, just keep the power law in mind because you're going to want to make more than just a couple of investments. Otherwise, you're taking a lot more risk than you really should in an already risky asset.
I think another interesting thing to think about as someone who might be interested in starting or continuing to angel invest is whether or not you do it on your own, which you definitely can, or invest via a fund. In addition to getting a portfolio, I think a big thing a fund like ours brings to the table is the opportunity to gain access to a lot of different type of companies. As an individual, you might not get the opportunity. Like if you think about when Google or Uber first raised money, the founders likely pitched a very small circle of their friends and family. And if you were not in that circle, it would have been very hard to hear about that company in those early stages and get investment opportunity. So I think one thing as a fund that we bring to the table is we get access to almost all of the early stage companies and the best ones in Nevada. So you'll always have the opportunity to assess and look at and think about the early stage companies because they're coming to pitch our fund.
One other point to add to Vicky's comments about having access to the right companies is, we do get the best and the brightest pitching to us in Nevada. But because we're out there in the marketplace and we're well known, we do get access to companies outside Nevada, really interesting things from outside Nevada that either somebody in our network brings to us or they've just heard of us and they come looking. And maybe our fund does not invest in a company that's outside of Nevada, but that doesn't mean our syndicate won't get access to those deals. So joining the club, investing in the fund, will not only get you the best deal flow and access in Nevada, but because everybody's coming through Las Vegas at some point during the year, they learn about us, and we get to see a lot of deals that are maybe not eligible for being invested in by Fund NV, but as part of our syndicate, by being an investor in Fund NV, you're going to get access to all sorts of deal flow, in addition to the stuff that the fund invests in.
One thing I think we mentioned earlier in our investment criteria is founder market fit. And what I find really interesting and exciting about working with Jeff and Kristen is that we all were previously founders. We founded companies, we're part of founding teams, and we're all operators scaling companies as well. So I know now we're all on the investor side of valuing companies, but I think one thing that we bring to the table that I really appreciate is that we all have decades of experience being in the founders and operators' shoes. And one thing I'll say is, as a founder, I've always in the past appreciated when my investors were themselves founders and operators, because the advice that they gave was that much more salient. And also the amount of empathy they had in helping me build my company is something that I think we bring to the table with our portfolio companies that hopefully make them better for our investors.
So, what type of investors are we looking for Fund NV? Well, the minimum investment is $10,000. So, we're looking for someone who has invested in the market before, maybe is looking for different asset classes to diversify their portfolio, and someone who maybe has a little appetite for risk. Early stage investing it can be risky. You shouldn't put a large portion of your net worth into pre-seed investing. This is not investment advice. So talk to your tax advisor on what risk profile is appropriate for you. When investing in pre-seed companies specifically, your money will be invested in the company for a long time horizon. We're talking about upwards of 10 years, and this money will be illiquid, meaning you will not be able to sell your stock and cash out. And so the time horizon for acquisitions or liquidity events, as they're called, is typically 7 to 10 years. So the company has to get sold or go public for you to get your return on invested capital. So keep that in mind as you're considering pre-seed investing with Fund NV.
So we often get asked, as people are considering investing in our fund or joining our syndicate, what kind of companies have you guys invested in? And I'll give you a couple of examples. One, through our syndicate, is a company called Flawless AI. If you've ever watched a movie or a series on Netflix or Amazon that looks really cool, but the lips just aren't matching what's coming out, it's clearly been dubbed. This company has technology that AI maps the entire actor's body and their face, and it changes the lip movements to match whatever the language is flawlessly, hence the name. If you're really curious, just do a Google search for a Flawless AI demo, and you'll be amazed at the company. That's one of the kind of companies that we get access to. We have another company that is started by a surgeon, because surgical schedules apparently get mixed up and things have to be rescheduled all the time for a lot of reasons. So he created a scheduling software that would help him in his own practice, and found that this is very helpful to many other medical practices around the country. Not quite as sexy as Flawless, but interesting nonetheless. We have another company that's competing in the AI space, in the AI infrastructure space, partnering with AMD to create an alternative to the NVIDIA monopoly, if you want to think about it that way. This is a company called TensorWave, a Las Vegas-based company, and capitalizing on the infrastructure build out in the AI industry.
So to Jeff's point, the companies we invest in are very exciting and interesting, not just as a fund investor, but as someone who does angel investing on their own also. Whenever I read updates about our portfolio companies, our syndicate companies, it always gets me really excited because I know I'm helping the company at a very early stage. And some of these companies, especially one of the ones Jeff mentioned, Flawless, their stories and how much traction they've built since we've invested have been amazing. So it's almost like every month or every quarter, as an investor, I get to read about what we've helped create. And the founders are telling us about their traction and how many more people are using it, what products they've helped create. And it's a really amazing experience. So we want more investors to be able to have that opportunity by investing through a fund like ours and to take part in that early stage development with these founders.